Well, hello, everybody. Thanks for joining us for this event. I'm very excited about it and very excited that you're here to join us. This is proving to be one of our most popular events oh my goodness, hundreds and hundreds and hundreds have registered already to watch this live, and even more will watch it later on in the recording. We've got a lot of fabulous, fascinating information to share with you, and I'm very excited to be joined by Matt Hougan. Matt, say hi. Matt is the Chief Investment Officer of Bitwise Asset Management. Always a pleasure, Matt, to spend time with you.
Great to be here, Rick. I'm excited for this one.
And this is going to be a bit of a different event because of the nature of this conversation. You know, we're usually talking, I think, a little bit philosophically or theoretically, but this one is really very tangible and real time. What's going on with the world of crypto and how it's really going to change the world. And there's really nobody better than Matt Hougan to talk about this. Matt is one of the world's leading experts on crypto. He built his career in the ETF world, where he was CEO of ETF.com and extraordinarily well known in the ETF space, and then made the transition over to crypto. And he is now one of the leading experts there. In fact, when the CFA Institute wanted to write its guide to crypto, they turned to Matt Hougan to write it for them. He's also a crypto columnist for Forbes, and he is on the lecture circuit. In fact, Matt, where are you now? You're in Florida today?
I'm in Miami today, Austin tomorrow. I am on the circuit, Rick.
And so we're really excited that Matt is here today. Tell us a little bit, Matt, for those who are unfamiliar, talk a little bit about Bitwise.
Sure, absolutely. Great to be here. Bitwise is a specialist crypto asset manager. Crypto is all that we do. We've been in the market since 2017. We're best known for having created the world's first and today running the world's largest crypto index fund. But I think what really separates us from other crypto fund providers is we're focused on the professional investor. That means financial advisors, RIAs, institutions, family offices. That's what our organization is set up to serve. That's what our products are set up to serve. And that's why we do this kind of research. I know the advisors on this call are getting questions from clients, but when is crypto going to affect the real world? That's why we put our research team to work, came up with these 12 examples, and excited to share them today to empower those advisors to talk to those clients.
And that's what we're going to get into right now. So we've got 12 of them that we're going to blow through. So in just 1 hour, if you have questions, feel free to enter them in the chat and Q&A box that is on your Zoom link. And I will be looking at those while I'm talking with Matt. And as questions come up that are germane to the conversation and I think helpful moving along, I'll chime in with those as well. So Matt, the very first one that I want to hit you with is a company called Farcaster. So we all know, just as a setup for this, how big a deal social media is. I mean, it's hard to remember life without Twitter and Facebook and Instagram and LinkedIn, but there's an inherent problem with those sites. We don't own the data, even though we're the ones providing it. We get exploited by those companies, and in fact, they can just shut us off, shut us out. Farcaster, using blockchain technology, is a solution to all that. Talk about it.
Yeah, I really love this example. I love it in part because people think of crypto as money and assume they're only monetary applications. But as you and I know, Rick, it's a new way to have a database, a decentralized database that's not controlled by any third party. So you gave the example of Twitter. I mean, how many people revolted, hated it when Elon Musk bought Twitter? Why? Because as you mentioned, they control the data, they control your connections and your followers, and they can also impart their own censorship rules on the social media site. They can promote some views, depress other views, and regardless of what side of the aisle you're on, that's a lot of power to give to one individual. So what is Farcaster? Well, Farcaster came up with the idea of a decentralized social network protocol. So if you think of Twitter, it's really two pieces. It's a database that stores your tweets and stores who follows me and who I follow. And then it's a front end where I can read those tweets, really two pieces. What Farcaster did is said, why does someone have to control this database? Why can't it be decentralized, built on blockchain technology, so that the tweets and the relationship that I have with my followers and my followers have with me are in this decentralized database that no one owns? And then multiple people can build different front ends for it. You want a front end that does the same thing Elon Musk does, you could build a front end to tackle into that. You want a front end that does something else, you can build that front end. You want a front end that pays you for posting instead of having you do it for free, you could work with that front end. And so by separating the protocol from the application layer, you create a decentralized social network that solves the problem that plagues Twitter today. And this is really catching on in the crypto community. You know, last we checked, it's still small, maybe 11,000 users, but many of those are active, over 3,000. Some of the biggest names in crypto VC are active on Farcaster or Farcaster clients like Warpcaster or Instacast. And this is really a new way to use blockchain technology to impact the world. And I think these are the kind of examples that, you know, your cousins are going to start to use. It's very real. I check it regularly. I'm on there. You can follow me there. It's an interesting project.
So it seems that this is like kind of within the movement of ownership, not merely engagement. That historically we have generally been consumers of the products and services big business creates, and they get rich on our backs, even though we're the ones, especially in the world of tech, where we upload all the data. We don't own the data. And this is a way where we can not only be a fan, say, of somebody, we'll talk about this later on today, but we can not only be a fan of a musician, we can be an owner of that music. And so is this what you see as the trend? I mean, 11,000 users is nothing. It's a drop in the bucket to the Facebook's 3 billion. But is this, you know, an evidence of where we're going?
That's exactly right. I think it's opened people's mind space. There's no reason that there has to be this centralized entity that controls your data, can abuse the data, can sell the data in different ways, can bias the conversation this way or that. It's just, that's all we know. All we know is Facebook and Zuckerberg, is Twitter and Musk, is Snapchat, etc. All we know is that. And what we're proving here is that there is this other way, and it's functional. And as a user, it feels the same. But underneath the surface, it's much fairer. It removes that censorship question. It creates multiple options on the front end, and it's just a better system. And you're right, we'll get to more examples, but you're seeing this in industry after industry after industry. Crypto is going to reshape not just money, but social media and music and mapping and other things, all by inverting this relationship that we've been stuck in and sort of think is the only way possible, and it's not.
So it strikes me that this is one of the newest and least developed areas of technological innovation within blockchain tech. Let's shift over to the other end, which is, I think, one of the most developed areas, and that's stablecoins. And this is purely all about money. Stablecoins have been in the news substantially. There's massive amounts of money involved. Talk about how this tech is allowing money to move at the way you like to refer to it as moving money at the speed of the internet.
That's exactly right. That's one of my old favorite points, which is money is the slowest moving thing in today's society. It really is. If you want to wire money to London, the fastest way to get it there is literally to jump on a plane with a suitcase full of cash. Otherwise, it's multiple business days, it's high fees. Try sending money to Mexico, or try sending money today to Argentina. You probably can't do it. So money is incredibly slow. It takes 5 days to pay my internet bill. Stablecoin is a digital representation of a dollar that's recorded on the blockchain. So you can think of it like a money market fund that exists on the blockchain. And once you do that, once you just take that out of the old system and put it into the new system, you can move $1 billion anywhere in the world and have it settled in a few minutes. You can do it for effectively free. And as you mentioned, there is so much money in this. You know, there's over $120 billion in stablecoin AUM out there. That's very real. Last quarter, there was, I think it was more money settled, $2 trillion of stablecoin settlement. That was more than PayPal did in all of last year. Just think about that fact. I know that a lot of people listening to these webinars don't exist in the crypto world and so are always surprised, but that's a data point. There's $2 trillion in stablecoin settlement in Q1, which was more than all of PayPal's settlement in the last year. This is a very real application. And what could it mean in the future? Well, there's no real gating factor between us and using stablecoins for settlement, for payment at stores, so that our corner grocer gets the money instantaneously instead of waiting 2 weeks. Even in the crypto community, a lot of venture capital deals now are actually funded using stablecoins. If you raise VC from a crypto native venture capital firm, they're not going to wire you money. They're going to send you USDC to fulfill that requirement. So I think this could be a $1 trillion asset class in a few years. I think it could grow substantially from there. This is money native to the internet. That's a big deal.
Well, let's talk about who these people are for a minute. I mean, I get PayPal. I'm thinking teenagers, although quite frankly, it's also me. When I'm settling up at the poker table with my friends, we're, the buyers, the winners and the losers are trading, money via PayPal. We're not bringing cash to our games anymore. So everybody understands PayPal. It's simple and easy. If you don't click the wrong button, you avoid fees. I say that because people have often clicked the wrong button and end up paying PayPal fees. But who is this $2 trillion? I mean, whose money is that? And who are these folks? It can't all be VC funding their portfolio companies.
No, absolutely not. It's absolutely right to point out that a lot of it is crypto trading. A lot of people trade out of Bitcoin into stablecoins, out of stablecoins into another crypto asset. It's the bridge currency. It's the stable value currency within the crypto ecosystem. So a lot of that $2 trillion represents trading related activity on exchanges, both decentralized and centralized exchanges. But you are seeing these other real world use cases pop up. I mentioned the crypto VC example because it speaks to two parties who are today familiar with crypto, right? A new company that's building in crypto and a venture capitalist that's building in crypto. So they have the infrastructure to have this payment relationship. And you're seeing that happen because they recognize it's more efficient. That's important because over time, more and more people are going to get familiar with crypto through a variety of means: Starbucks NFTs, Nike NFTs, trading, use of music NFTs. They're going to get familiar with the core architecture of crypto, and then stablecoins become extremely easy to use. You are also seeing real world applications in many emerging markets where people want access to a more sound currency. Stablecoins fulfill that need for them as well. I really do think they're a killer app in this space, Rick.
It would seem to me that retailers are low-hanging fruit. I mean, they are already accepting credit cards and debit cards. They're incurring massive fees to Visa and MasterCard predominantly for the use of that convenience factor. It would seem to me that they would love the idea of, instead of accepting a debit card from Visa, that they would accept a stable coin backed card that would eliminate the 3% fee that they're having to pay to the credit card company. I mean, it's tell me how a stable coin debit card wouldn't be superior to a Visa.
Yeah, it would be superior. It would be superior is the answer. I think that's actually something that could flip relatively quickly. Now, before it flips, we're going to need stablecoin regulation because currently not all stablecoins are treated equally. Not all stablecoins are of the same high quality. So the system needs to mature and evolve. But once we get that, absolutely, why are we paying that 3%? And then why is the grocer waiting a week or 2 weeks to get that money from Visa when they could have it in their bank account overnight? There's enormous fat in the traditional financial system in terms of high fees, in terms of long floats, in terms of settlement delays. And stablecoins just don't have any of that. It's direct, it's atomic settlement, it's nearly instantaneous. And I suspect if you step out 5 years and we get some regulatory and legislative progress, I think you could see this be an enormous use case for crypto.
I have a double-sided reaction to it. On the one side of the coin, I would say the current banking system, these are not dumb people. They're some of the smartest in the planet. That's why they're in banking, have to see this tech as an existential threat. And as a result, I have to believe that they are going to improve their businesses to eliminate the obsolescence that this tech would otherwise create. And on the other hand of that coin, I see, well, gee, they're already doing that. I look at JP Morgan and the JPM coin, which is using, in essence, this blockchain technology for same-day settlement instead of the T+1, T+2 environment that we so frequently have. So are we going to see the major players in financial services, the banks, the brokerages, the custodians, the credit and lending organizations jump on this? And will that all accelerate the availability for ordinary folks?
Absolutely. Absolutely. Just yesterday, Visa announced, it's building out a major crypto effort in the space. They definitely, they are smart people, as you say, and this is just a better technology. Now, will they all succeed? Absolutely not. What happened in the internet? Some media companies thrived and are doing better than ever, and some local hometown papers fell by the wayside and sold their real estate. Same thing will happen here. I do think we'll get turnover in the financial leaders. I think we'll see new giants emerge. I think we'll see some giants fail, but absolutely they'll adopt it and it will grow significantly. One piece of news from last week, SocGen over in France launched their own Euro stablecoin on the Ethereum blockchain. That's a pretty big deal. That'd be like, JP Morgan launching a public blockchain stablecoin that other people could use. It's happening in Europe. It's going to happen here. I think it's inevitable.
And this is kind of an unrelated data point, but it's interesting in the context that Apple just launched its savings account with Goldman for a 4.15% interest rate. Everybody has always said, when will tech get into banking? Well, hello, here it is. I think you're right. Robert has asked a question which is really on point in the world of stablecoin conversations. I think we have to acknowledge Terra Luna. So let's talk about last year's implosion of one particular stablecoin, where in a day and a half, it went to zero, losing $60 billion. Talk about the technological risk factors that exist with the space so far.
Sure. Yeah. When you think of stablecoins, you can think of a tree. So they're trying to be a digital representation of the dollar. There are two fundamental ways to do that. One is it's collateralized one by one. So like USDC, you send in $1, they invest in a BlackRock money market fund, and they give you a digital representation. There's no meaningful risk there because money market funds will trade at $1 except for under extraordinary circumstances, and we all trust them to do that. I think USDC is incredibly sound. On the other side of the spectrum, you have what were called algorithmic stablecoins, and that's what Luna was. And what algorithmic stablecoins are math experiments that use two offsetting coins to attempt to maintain a peg of 1 for 1. Luna got the biggest. It got to $60 billion before it collapsed. But if you know the history of crypto, you'll know that there have been multiple shots on goal for this, and they have all ended in exactly the same place, which is spectacular failure. Decentralized algorithmic stablecoins simply don't work. It's a math exercise that fails in extreme moments, and you always end up with extreme moments. So we have to set those aside. In fact, there's bipartisan legislation in Congress right now that would define stablecoins and would specifically disallow those algorithmic experiments from calling themselves stablecoins. I'm supportive of that legislation. So that's really just a different failed approach. What you want is fully collateralized, fully regulated, fully transparent stablecoins. I think USDC is the best example of that. And I think that's where the industry will head.
Yeah, blimps are okay, just no more Hindenburgs.
Right, exactly.
What it really comes down to. Let's move on to number 3 and talk about HiveMapper. We all live with Waze and Google Maps. Talk about HiveMapper.
Yeah, I love this one. This is another fun one. So, a funny story about Waze when it started, it was trying to be free, so it couldn't afford to buy maps. And in the early days of Waze, the way aggregated maps was users would install the app and it would map them as they drive. And so in the earliest days of Waze, it would always give you the wrong directions. I think many people who are early adopters experienced that because it didn't know how to get different places. HiveMapper is trying to create an alternative to Waze and an alternative to Google Maps. Instead of having a few Google cars driving around taking pictures of roads or buying maps from high-end map suppliers, they've thought, let's decentralize this. So any person in the world can order a 4D camera from Hive, install it on their car, and drive around. And as they do, they're providing mapping services to HiveMapper, and they're providing real-time photos of the world so that you can use that for applications like Google Maps or Yelp or et cetera. And so many people are doing this that it's mapping 0.1% of the world's roads every day for free. Now, when I say for free, what do I mean? Well, the people who are driving get paid in a crypto asset. That crypto asset is called Honey. And once the network has created a full real-time updating map and photo imagery of the world, HiveMapper, the company, will sell the rights to that map to different users in the real world. In order to use the map, they'll have to buy Honey, this token that the drivers are getting paid, and pay it back to HiveMapper in order to access these mapping services. What I love about this is it's another sort of non-financial application of crypto. One thing you can do in crypto is incentivize millions of people to do an activity in the earliest days when there is no revenue, by providing them with a token that could have value if the service they create has value in the future. And it's really incredible. I encourage you to Google HiveMapper comparison. You can see the live pictures they're taking versus the ancient pictures you get on like Google Maps, where a store is closed or it looks decrepit. And then in reality, there's a 12-story apartment tower there. And they have dozens of these examples because these photos are being updated every day as people drive around. It's an incredible application of blockchain technology, and it's really cool.
And it's also very new, as you've said. And if they're mapping 0.1% of the world on a daily basis, I know they're doing this, you've told me offline, at a faster pace than Google Maps did. But how long will it really take for them to have a representative portion of the world mapped?
I don't know, a year, something like that, I would guess.
That's not long at all.
It seems to be accelerating. No, they're going at 5 times the speed of Google Maps. And think about that. You had Google, one of the largest companies in the world, versus this startup with a handful of employees. And that startup is mapping the world at higher fidelity, 5 times faster than Google did. It's an incredible demonstration of the power that you can create through the sort of decentralized incentive structure. So yeah, I think in a year, in 2 years, this is going to be a very big deal in the world.
You know, and that rate of speed should not really come as a shock to folks. I mean, the story that we used to tell pre-internet 3.0 was telephones. You know, it took the United States 150 years to develop cell phones, and South America did it in 10 years because they didn't bother hardwiring the continent. They just went straight to cellular. And that's kind of why HiveMapper is able to do something fast that took Google forever, because the tech now exists that didn't exist before.
That's exactly right.
I think this is why it's hard for those old companies to be agile and flexible. They've got an infrastructure. They just can't turn that aircraft carrier around as easily as a new rowboat. So
that's right. That's right.
Now, both of those examples you cited so far, Matt, Farcaster, which is focusing on a new social media approach, and HiveMapper, a new digital mapping site, these are new, and these are new startups. Nobody's ever really heard of either one of these companies. Let's shift to an extraordinarily well-established, one of the best-known brands in the country, if not the world, Starbucks. Talk about what Starbucks is doing with blockchain tech.
Yeah, this is really incredible. They're pivoting their customer rewards platform from one that provides discounts. You know, you buy 10 coffees, you get one free, to one that uses NFTs to affiliate people with the brand. In other words, instead of just earning new coffee discounts when you go to coffee, Starbucks rolled out these NFT stamps and collections that you can earn by going to Starbucks a certain number of times, or going to a certain set of Starbucks over a period of time. And these NFTs have become incredibly valuable. Now, you may think that that sounds goofy, but it makes a lot of sense from 2 perspectives. From Starbucks' perspective, it makes all the sense in the world. You get to reward people with a customer loyalty item at an effective cost of 0, instead of providing them with a discount. That's just strictly good. If people value this thing and it's free to give, that's strictly better than giving them a discount, which costs them directly on their P&L. But then from a user's perspective, there are lots of people who have deep, deep relationships with the Starbucks brand. They go there every day. They have their favorite drink. They know their barista. And just the proof is in the pudding. They've issued tens of thousands of these NFTs, and they're trading for hundreds, and in some cases, thousands of dollars, people wanting to collect these stamps. Now, will they persist forever? We don't know. But the idea of using NFTs as a reward technology and you're able to connect utility to them, maybe let them into special reserve coffee tastings or let them do other things with these NFTs. I think that could be a valuable application of blockchain that's used across all rewards companies. Again, why give a discount if you can give experiences, if you can give brand loyalty at lower cost that people value more, and that they even get sort of an economic benefit from if they're able to sell them to other people. This is a big initiative by Starbucks. It's on the Polygon layer 2 solution. It's a public blockchain solution, and it's very successful, and they continue to build in it.
And this one, I get more enthusiasm about just innately because it is Starbucks. And this is what I think is going to serve as one of the big snow builders, so to speak, the big snowballs rolling downhill. The fact that if you have a young startup that is doing something cool and nifty with the latest tech, okay, that may or may not get the attention of the Fortune 500. But when one of their own does something that is an improvement over what all of them are already doing, how can they remain in denial? How can they not engage? And so I have to believe that when a company like Starbucks engages in something in this way, all of the other retailers from McDonald's to Nordstrom's have no choice but to equally pay attention to this. And that snowball happens really, really fast because of the power and size of these companies. So this is pretty impressive stuff going on.
It's very impressive. I completely agree with that. And then it's an onboarding tool to bring millions of Americans into the crypto ecosystem, to learn what a crypto wallet is, to understand what an NFT is. Maybe they become attracted to an NFT that's somewhat parallel and similar, but different. I really think it's a powerful example. It's on every corner in America, and it's happening right now. I love it because people say, where are the real world use cases? Well, let's go to our local Starbucks and we'll start there.
Yeah, I think you're right on to that. Now, at the same time, let's go back in the other direction, because there is something huge going on that is so completely under the radar that people are shocked when they hear the numbers. Talk about Uniswap.
Yeah, absolutely. Well, we all know what Coinbase is. Coinbase is one of our favorite companies. It's, like a brokerage service for crypto. You can be a Coinbase user and you trade Bitcoin for Ethereum, etc. Publicly traded, has thousands of employees, fantastic company. I'm a big admirer and shareholder. Uniswap is a software program built on a blockchain that provides the same service. It's a decentralized trading venue. You can go to Uniswap and trade Ethereum for Solana or Solana for Aave in the same way you would on Coinbase. But the difference is, while Coinbase has 3,000 employees, Uniswap has 0. It's just a software program. Even the lab that created it is maybe a handful of people, maybe up to 30 people. And so far this year, Uniswap has done more trading volume than Coinbase. Just to let that sink in, Uniswap has settled more crypto trades by volume, by money, than the largest crypto trading firm in the US, a publicly traded entity of Coinbase's size and stature. And it's done it with 0 employees. This is a revolution, and it's incontrovertible, and it's been growing over the past few years. And when you scale this out to real world assets, if you think about stocks and bonds and other assets eventually moving to trade on blockchain rails, and you think about what it means to be able to have that much trading volume without the overhead attached to the legacy system, you can see just how disruptive crypto is to the real world. So it's one of my favorite use cases. It's billions of dollars a month, and it continues to grow over time.
And nobody's ever heard of it, which is the kind of shocking element to this, that when people say, oh, it doesn't do anything, crypto has no use, nobody's involved. And it's like, dude, that's billions of dollars a month in activity. I've got this laying on my desk somewhere. Let me pull it over here. Matt, when Uniswap first came out, they had their proof of concept. And I have one of the original pair of Unisocks that Uniswap issued way back when.
That's amazing.
Yeah, so these Unisocks trade on the Uniswap blockchain network, and digital. which is a contradiction in terms. But yeah, there are only 500 pair of those socks that they produce.
That's amazing. What an incredible fact.
Yeah, so it's just really amazing to me that this thing is huge, growing leaps and bounds. Nobody has ever heard of it. And if you need any further evidence of the power of this tech, it's in Uniswap and DeFi. Let's move on. We're talking about the 12 real world use cases. We have just covered 5. We're now halfway done at number 6. Everybody loves music, Matt, and we are huge consumers of music. But now we have an opportunity to be more than just a fan of our favorite recording artists.
Yeah, this is going to turn the music industry upside down, and it's going to happen faster than anyone thinks. You know, as you said, we're all fans of music. We all love finding the next big hip band before anyone else, and we buy their t-shirt. We get social credibility from it, and we show our friends that we knew about Radiohead before they even made it to the US, before anyone cared about them. But crypto allows a new way to do that. So what artists are doing now is when they create songs, instead of selling those music rights to Sony, to Universal, to whatever large music institution, they're chopping them up and selling them directly to fans. So what I mean by that is you can go to a number of different music NFT royalty sites and buy a portion of the streaming revenue from some of your favorite songs, from artists like Rihanna, like the Chainsmokers, like Nas. These are big artists. And again, instead of selling the rights to that music to Sony, they're selling them directly to fans. And think about what that does. Instead of having a distant relationship with a music conglomerate, these artists have direct relationships with their fans, and they can market to those fans more directly. Instead of being a casual supporter of Rihanna or the Chainsmokers, I can literally be financially incented to make sure my friends are all listening to the same songs. And you're seeing real royalty payments stream through these systems, earning real single-digit returns for users who own these songs, are able to express their fandom. I think in the future, it's entirely possible that most music rights, at least a portion of most music rights, will be sold directly to fans instead of to large conglomerates, and that will create a more rabid fan base, tighter connections between artists and fans. And it's hard to see the downside. It's happening now. You could literally go right now and buy the rights to many of the songs you're hearing on the radio. And every time someone streamed it on Spotify, you would get effectively a micro payment accruing to your account, to your value. And then if you wanted to sell that song later, you could sell that song as well. I think it's incredible.
So is this going to respond to the question, the criticism, frankly, that so many people have about NFTs, that, you know, when we look at the Bored Ape Yacht Club, when we look at Crypto Kitties, when Crypto Punks, the attitude is that those are just pump and dump schemes. They're, you know, it's the age-old suckers bet, that the only reason somebody buys an NFT is they think they're going to get somebody else to pay them even more for it. And it's nothing but tulip bulbs and beanie babies. Is this an argument against that criticism?
It's proof against that criticism. I'd say it's more than an argument. Look, when you hear the word NFT, what you should hear is not beanie baby. You should hear digital property rights. And like any property right, it can be attached to something that's of speculative or no value, or it can be attached to something that's very real. Now, without opining on Bored Ape Yacht Club, some people think that that will have no value in the future. Fine. But attaching it to songs and royalties is something else entirely. The other thing to remember that most of the most innovative applications of technology come from the confluence of multiple breakthroughs, right? If you think about social media, it really wasn't until we had these phones with incredible cameras in our pockets and the new internet that social media truly took off, right? Because we could share photos and images. The same thing is happening here. Not only do we have this new technology of the NFT, digital property rights, but we have this new financial architecture that allows for low cost and instantaneous payments and tracking. And it's the combination of these that are creating so many more use cases. So yeah, I think NFTs have gotten a bad name. Again, when you hear NFT, think digital property rights, the first way we've ever had digital property rights in the world. This is one application. There are dozens. If you can do this with music, why can't you do it with books? If you could do it with books, why won't you do it with movies or TV shows? Start to think about all the different ways you can disintermediate connections between artists and fans. It's pretty exciting stuff.
Yeah, my favorite example in all of that, which you mentioned a good list, but you didn't mention artists, meaning, painters, those who use acrylics and watercolors, and picture the Picassos of the 21st century. These folks, when they create a painting, they get to sell it once. And later, when that buyer resells the art, the original artist gets no cut of the revenue. Now, if it's attached to an NFT, a digital receipt, every time that painting is resold, the original artist gets a cut of the royalty. Just like a book author is constantly getting royalties from the sale of more copies of the book, and just as Rihanna is constantly earning money every time the song is played, now every time my painting gets sold, I'm continuing to earn revenue, and I will throughout a lifetime legacy for my heirs. That, I think, is extraordinarily exciting for a lot of creators in a variety of fields, from dance to acrylic paintings.
Yeah, it's a new technology with new uses, new applications, and we probably are only just discovering it, right? We're still probably on the early edge.
So let's talk about pay a little bit further. It's something far more mundane, but it makes the world go round, and that is literally your paycheck. Payroll. Talk about international payroll and how blockchain is changing it.
Yeah, I think this is a nice, incontrovertible use case. Again, an example of how crypto is being used in the world. I have a neighbor, runs a company called Premise. They do real-time inflation reviews, and they do it by hiring people all around the world to take photos of prices in stores. So someone in Bangladesh is literally taking a photo of the price of potatoes in Bangladesh to track potato inflation. And you do that in every country around the world. You get an incredible data set that's valuable to multiple people, hedge funds, government institutions, et cetera. But how do you pay all those people? How do you pay 10,000 people scattered around the world? You can do some of it through PayPal and other sort of payment applications, but it's hard to set up payroll in 100 different countries. And so some of the people in that network get paid via crypto. And the reason I like that example is it speaks to how simple it is to do some things in crypto that it's very hard to do in the traditional financial system. If I want to pay someone in India from the US as an employee, as a contractor, et cetera, setting up the financial architecture to do that could take days, it could take weeks, it could take months. If I want to pay them with crypto, I can ask for their wallet address, they can tell me, and I can send it to them in the next 10 seconds. And I think this is just a nice example. As the world gets more interconnected, as the many applications become more global in nature, you're going to see this ease of use pop up in different areas. And I like this example because it's real, it's happening every day. It's significantly cheaper than standard bank transfers, significantly faster. And that's pretty exciting.
It has an additional benefit, which is that it allows for micropayments, a fraction of a penny, which you couldn't ordinarily do economically with ordinary currencies, but you can with cryptocurrencies.
That's right, exactly.
We're on to number 8. We talked about Starbucks. Here's another big brand name, Nike.
Yeah, I love this one as well because it sort of breaks people's heads. The headline here is that last year, Nike did 186 million in NFT revenue. So what does that mean? That means that individuals out there spent $186 million buying digital sneakers. Now, on the one hand, Rick, that makes us all...
First question has to be, why? What are they thinking? Why'd they do it?
I agree. On the one hand, that's true. But that same question can be asked of the person who spent $50,000 on a Birkin bag or $1,000 on some Nike Air Force Ones or anything else. Most of those shoes just sit in the closet. Maybe people wear them once. They're digital status signals and stores of value, and people use them to express their affiliation with the brand and their wealth and their taste. But most of us live our lives online, right? I spend most of my day online. We're conducting this online. I was on Twitter earlier. I was on an intercompany meeting earlier. If you're living in that world, why wouldn't you express your wealth, taste, worldview natively to that world the same way you would in the offline world, right? No one can see my shoes right now. They're very nice. But if I had a pair of NFT digital sneakers, I could express that much more easily in this setting. And it's not just Nike, right? If you look at Dolce & Gabbana did $23 million in revenue. Tiffany did $12 million in revenue. Gucci did 11 million. Adidas did 11 million. Time did 10 million. Budweiser did 6 million. And as you mentioned, if you're a Fortune 500 company and you're looking at that, you're thinking, well, why wouldn't I do this, right? It has very low costs, monetizes my brand, and brings people into the crypto ecosystem. So you may not like this. You may think digital sneakers are goofy, but you probably don't think $186 million is goofy. And you can't get past the fact that that's what they earned last year.
And that's got to be 99.99% pure profit.
That's right. Exactly. It's a monetization of brands. If you look at people's balance sheets, the amount of value in intangible assets has grown exponentially over the last 2 or 3 decades. It's a huge portion of the value of most companies. NFTs allow you to monetize that. So if you're Disney and you're sitting on all that IP, what are you going to do? You're going to monetize it through NFTs. And that's going to bring tens and hundreds of millions of people into the crypto NFT ecosystem because they can't resist it because it's so obvious to do. And I think Nike is leading the way here.
Yeah, I heard that Disney is going to be creating hundreds of millions of NFTs of its characters, and they're going to be virtually storming the state capitol in Florida. But I digress. We've talked about Nike and Starbucks, and we talked about companies using stable coins to make payments on the internet of fractions of a penny. This requires an organizational structure of some sort. And traditionally, we've got LLCs, we've got C Corps and S Corps. Along come DAOs. Talk about DAO. Decentralized Autonomous Organizations.
Decentralized autonomous organizations are an interesting experiment that some people think are the biggest organizational innovation since the C Corp, the first natively digital organization. The example I love to use here is Constitution DAO. I don't know if you remember Constitution DAO, Rick, but there was one of the last private copies of the Constitution, and it went up for auction. And there was a group of people online who decided they wanted to buy it and donate it to the Smithsonian. Because incredibly, the Smithsonian does not have a copy of the Constitution, which I find ridiculous and vaguely absurd. And so they formed a DAO. And what they did to form a DAO is they wrote a little bit of code that said, we're forming an organization that can take donations from people and will bid for this Constitution at Sotheby's up to the amount that they raised. And if it's successful, they'll donate it to the Smithsonian. And if not, they'll return people's money. And over the period of 3 days, 17,000 people donated. It raised $49 million. And then they went to Sotheby's and they bid it up to $49 million. Now, in a twist that could only come from like a Marvel movie, they were outbid by Ken Griffin of Citadel, who then took the Constitution home to hang in his bathroom or something. But it was a beautiful example of how you can use this technology to bring people together in an economic organization almost instantaneously around the world that is locked in to executing in a certain way. If you think about how you would have done that in the traditional world, in the world of companies, it would have taken years, months. You would have had to trust the founders of that nonprofit or company not to walk off with your money. You would have had to have the risk they would misuse it. In this case, you were donating it effectively to a software program that could only do one thing. And so you had trust that it would do that thing. Now, what does this all mean? I think we're just starting to feel the different experiments in DAOs. You have people building DAOs to buy golf courses, DAOs to buy professional sports teams. When I think about it, and I think about sort of the growth of AI, you could have DAOs that are an economic center that people engage with and have AIs that put that money to work around certain parameters. I think there are a lot of applications of these, and they are all, of course, built on crypto and blockchains. And I think it's a pretty big deal.
It's early. One of the biggest issues with these is that it is a legal structure we're talking about creating. Whose laws apply? Is it where the software developers are when they design it? Is it the person who buys the token where they live? What happens if there's a dispute? Whose country's commerce laws are applicable? In what court do you file a complaint? It's still early, isn't it?
Yeah, it's still early, and they're real risks. They're not limited liability corporations. So by joining a DAO, you could have theoretically infinite liability. So this is something that needs to interface with our legal system and will evolve. But it's a neat new application of this technology. And you could imagine a world where you get the proper kind of regulations, the proper disclosures, the proper liability limits, where this becomes truly significant. It may not be, but you are seeing these bubble up. It is a use case that exists in the wild.
Let's go much more high level, much more fundamental. We have 3 more use cases to describe in the time we have left. Lots of folks are asking and commenting really wonderful stuff, and we're just struggling to keep up with the time. I think this 12 example, Matt, could have been a 12-hour webinar to cover all 12. But let's go more fundamental, and that is, what do you, just the name you give stuff. So let's talk about, we all live and die by our domain names these days. Talk about that.
Yeah, this is a great small example. One of the issues of anyone who's adopted crypto is when you want to send someone some crypto, they have to give you a 25 or 30 or 50 digit code, 489 AB, capital C. It's a nightmare. And particularly if you're sending a lot of money, it's terrifying, right? You slip up, you put a 2 instead of a 1, you fat finger an S instead of an A, and all of a sudden $100,000 has gone to the wrong person. It's a real problem. Fortunately, there's a real solution. There's something called ENS, which is the Ethereum name service, where you can register a name like matt.eth or Hougan.eth or rick.eth to the Ethereum blockchain. And then you can record metadata to it that points to your specific wallets. And as a result, if someone wants to send you $1 million in Ethereum, they can just send it to rickedelman.eth, and no one's going to misspell that the way they might a 25-digit item. It's also nice. This is recorded forever, and you can update the metadata. It would be as if you could have a single email address and rotate it in different ways. We have the same thing in the traditional World Wide Web. We use google.com, but underneath the surface, it's actually like 15 numbers. We just have a redirect from the domain name. And that's the same thing that's going on here. And I actually encourage people, it's pretty cheap to register a .eth address. If you're at all interested in crypto, you might go ahead and register your name. I know a lot of people are upset that they didn't register their name early in the growth of the internet. And as a result, they don't have, rickedelman.com. This is a chance where you could do that in the Ethereum ecosystem. And I think it makes sense for some people.
Yeah, I think you're absolutely right about this, that we will know that crypto has truly permeated society when we are engaging in crypto without really paying any attention to that fact. And that'll be evidenced by the nomenclature we use when interfacing with each other online. So this is a core fundamental example of how we need to get on with it. So I agree with everything you've just said. And one of the things we're doing online more than ever is we're playing games. So talk about video gaming and the incredible explosion of this new business category.
Yeah, this is one of the hottest areas of crypto for sure. I think if you look at the funding from the venture capital community over the last 2 years, you'll see that investments in crypto-focused games surpassed a huge number of other areas in the market. I think A16Z raised a $600 million fund just focused on crypto gaming. Look, there are 2 applications of crypto into the gaming world that really matter. One, you can have a fully decentralized game where all the activities are actually transactions on chain, and we're starting to see that happen. But by far the bigger one is owning stuff in games. Now, owning stuff in games is already a big business. I know this breaks the minds of people my age or over, but if you look at the amount of money that kids spend buying, let's say, skins in games like Fortnite, it's enormous. I think it's over $50 billion a year in in-game purchases of items. One issue with that is if you buy them in one game, you can't move them to another game. You don't actually own them. You rent them from the game provider, right? And you can only use it within their game. They can determine the number of them. They can increase the number of them. If you apply that to blockchain technology, you can buy, let's say, Nike sneakers, and you can buy them and use them in multiple game settings because the ownership of those sneakers are at a decentralized layer. And so by converting sort of the purchase of digital items and goods from a relationship with a company to a decentralized ledger, you actually begin to actually own those goods and have them be portable, have them be resaleable, not allow the gaming company to create new versions of it. And I think it could revolutionize that portion of the gaming world. And again, it's already a $50 billion economy in a structure that doesn't work well. If you think about how large that economy could be once we have true property rights and once items are movable from one location to another, you could be talking about $100 billion. You could be talking about $200 billion, all built on blockchain technology. It's another great example of how this is going to, crypto is going to get into people without them knowing that it's crypto. They're just going to want this stuff in the gaming sense. They won't care that behind the scenes it's decentralized, but they will because they'll own it exactly themselves.
And the fascinating element of this is that when that team does buy those Nike shoes to play in Fortnite, they're not doing this with dollars. They're taking the dollars and turning them into crypto in order to make that purchase online. So now we're building out Bitcoin and Ethereum and Solana and Polygon and Algorand and on and on and on. And the stable coins that go along with it, and we're engaging the DeFi platforms. It is all, as you mentioned earlier, it is all a web that is interconnected, that the advent and development of one category is using and being built on other categories, and all of a sudden any one thing that succeeds is causing a lot of other things to succeed. And this is how you get the compounding element on an exponential basis.
That's right. That's exactly right. And it can happen much faster than people think. In fact, I'd argue that it is. And again, hundreds of millions of dollars flowed into this space over the last year and a half. Those games are going to start to roll out later this year and in 2024. And so I think this could really take off faster than many in the mainstream media are thinking about it.
And David has just asked, talk about, Matt, this in the context of the metaverse.
Yeah, I think this is part and parcel of the metaverse. When people talk about the metaverse, I always think they make a mistake in assuming it's binary. Like one day we're in the real world, Rick, and the next day we're in the metaverse. And I don't think that's how it is. I think it's a sliding scale. Over time, our digital engagement has been getting deeper and better. And I think that's going to continue and get deeper and better and better and better until it's more or less blurred. And I think this is an example of how we do this. This is moving property into the digital setting. It's allowing us to bring sort of real world fashion into the gaming world. It's blending that space between the physical world and the metaverse. And I absolutely think in the metaverse, real world digital ownership is going to be a big deal. And this is sort of like an early example of how we get there.
We've talked about an awful lot of innovations in the field as a result of blockchain technology, but our item number 12 in our 12 use cases goes back to the beginning. The original Bitcoin. Talk about why Bitcoin is on your list of the 12 examples of commercial applications.
Yeah. Because I think it's a real one. I think of Bitcoin as an emerging digital store of value. It's going to be a way that people hold value outside of traditional fiat systems. In the same way people hold value in gold, it's just in the case of Bitcoin, it's digital, it's easier to move, it's easier to store, it's harder to counterfeit. I think it's a 21st century digital alternative to storing value. And the two important things to me are, I know people criticize it for being volatile, but it's been enormously successful as emerging as a new store of value. If you think about how a new store of value would emerge, Rick, you would imagine at the early days, it would be small and not worth much, be extremely volatile. People would be skeptical. No one would know about it. And then over time, it would grow in value. Its volatility would fall. Its security and stability in the world would increase. And that's exactly what's happened to Bitcoin. It's gone from something worth nothing to something worth $500 billion. It's gone from something that you could exchange to local currencies nowhere to something you can do in every country around the world. No institutions own it. Now institutions own it. There's no regulatory setting. Now there's a regulatory setting. There are no custodians. Now there are custodians. It's doing pretty well. So I think it's on the train to be an emerging store, to be a real store of value that's accepted in the world. And then the other thing about that is that that market is so large. You know, when I came into the crypto industry from ETF land, people would talk about Bitcoins being worth half a $1 million or $1 million. And I thought those ideas were ridiculous. Nothing 50X's in value, right? Nothing in the traditional find sale world 100X's in value. And that's what people were talking about. But all it would take for Bitcoin to be worth half a million dollars each is to effectively sort of match up with what the gold market is today. And I think Bitcoin is more interesting. It has more applications than gold. And so it's not going to happen tomorrow. It's not going to happen in the next 3 years. But could it happen in the next 10 years? The Bitcoin is pari passu with gold, that maybe it's held by a few central banks. Maybe it's held in institutional assets. Maybe it's held for some portion of the offshore wealth market. I think that's increasingly possible. I think the data suggests we're on that train. So I think this is a real world use case. I think it's one that I use, and I think a lot of other people do too.
We've covered a huge amount of ground here, and there were a lot of wonderful questions we didn't have time to get to. And Matt, you've got an opportunity for people to get their questions asked and answered.
Uh-oh.
I dropped out for a second there.
That's all right. Yeah, absolutely. You know, Bitwise is unique in that we have a national sales team that exists solely to help financial advisors answer questions from clients or answer questions that they may have about the market. We're the only company with folks in all the different beautiful territories we have here. We also travel around. I'm in Miami today. I'll be in Austin tomorrow. And we love talking to advisors. So if you have a question about these use cases or about anything that's going on in the crypto market, please download our business development team's information. It's in the downloadable materials, and reach out to your local representative. They would love to talk to you. That's why Bitwise exists. And we love hearing from advisors. So please do reach out.
Yeah, just go to the chat at the bottom of your screen, or and you can click that link that'll take you to all this info so you can reach Bitwise directly. Matt, thank you so much for joining us on this program. It's incredibly informative, and I think pretty exciting as people are beginning to get a sense of why this is a tech that's here to stay. I want to tell you about what's coming up here at DAC FP. Our next event is May 23rd. On self-custody. This is a subject that is really at the core of how we manage assets. And so you need to learn what self-custody is all about. That's what that event will be. So I encourage you to register your space for that event on May 23rd. And to learn a lot more about this tech, be sure to get our certificate in blockchain and digital assets. Matt, you've gone through the course. You've had your entire team go through the course. This is a world-class faculty. You'll get up to 18 CE credits. Half the course is on the tech, half on practice management. And we now have 4 separate tracks, one for advisors, one for financial back office professionals, one for the crypto community, and another for investors, consumers, and students. And each of those tracks has a basic and an advanced certificate that you can use to build your career and your business. And Matt's going to be in Austin tomorrow, but I'll be there in June. We're having our annual Vision Conference. And this is the longest running digital assets conference specifically for financial advisors and accredited investors. Among the keynotes, downtown Josh Brown, Patrick McHenry, who is the chair of the U.S. House Financial Services Committee, a strong crypto supporter, and Dave Hirsch, who is the head of the SEC's Division of Crypto Enforcement. So that's going to be a real powerhouse conference. You can learn all about it by going to dacfp.com. And I encourage you to pick up a copy of my #1 Amazon bestseller, The Truth About Crypto, and tune into my podcast every day, 5-7 minutes long, on the content you need to know to build your business right now, available everywhere you get your podcasts. Matt Hougan, thanks so much for joining us. Always a pleasure, my friend. Look forward to seeing you again before too long.
Thanks for having me.
Thanks, everybody. See you soon.